We're seeing Snap fall double digits after a bit of a disappointing earnings report, and really the guidance is what's sinking the stock. But year to date, we've seen a lot of confidence in Snap, despite its decline this morning, still up 10%, outperforming. And you look at Meta, up 20% to start the year. What's given investors so much confidence in these social stocks? And does Snap's report and what we might see in Meta's report, do you see that changing the landscape?
Unfortunately, I think in these stocks, the confidence might be a bit misplaced. The reality is that social media, has changed, and Snap just seems to not really be able to catch a break, right? A lot of the problems here, advertising aside, are just due to the fact that, it hasn't stayed super relevant. A lot of their older customers are using Instagram more. A lot of younger people are using TikTok, and, they're trying new things like a subscription business, but that's tiny. It represents only, 0.5% of daily active users. So, I don't see, barring some big product innovation, how they're going to find kind of a sustained growth trajectory that the street's going to love anytime soon.
So, Daniel, it sounds like Sarah's saying that Snap's about to go the way of Friendster. Is there anything that could save Snap at this point? Because she's bringing up some great points. So much competition from TikTok, and Instagram offers many of the same features.
I think Snap is going to have to transition its business more effectively as we think about this next part of the social media evolution. They've clearly continued to innovate in key areas like augmented reality, but the industry is shifting to more short-form video. Clearly, competition remains intense, and they also need to improve their tools for advertisers so that on that side of the platform, there is value to be realized. And so they're cutting costs. Clearly, cyclical headwinds are a factor there, but it is going to need to re-architect parts of its platform, remain valuable to advertisers, and of course, continue to evolve the user experience to see a rebound in growth. So that'll probably take a little bit of time.
All right, Dan, I'm going to stick with you on this. So you're mentioning innovation, reworking the platform and things like that. We've seen Meta, not this year, but last year, kind of get hit for really focusing on what they believe might be the future of the company, AI. What are you expecting from the report today, and also their spending when it comes to AI?
I think we'll see that the user numbers remain quite healthy overall. They're clearly being impacted by some of the cyclical headwinds that everyone is facing. I think the bigger story there in terms of trying to leverage artificial intelligence both in their core social platform to drive better user experiences in areas like short form video, and then for advertisers on the other side to drive a better signal so that advertisers get value in an era where privacy is a much bigger focus. The bigger story or longer term story around this shift to the metaverse and really with AR and VR devices, that's going to take some time and might also require a shift in the business model.
So, Sarah, what do you think about Meta's chief technology officer blogging just a bit and talking about focus, what the company's focused on? Do you believe that Meta is focusing in the right areas, or do they need to change their focus?
I don't think they're focusing in the right areas, and the street has certainly not thought that over the last year. The reality is that very few people are spending their time getting excited about a metaverse where we can barely have legs, right? People want to see the street, and I think even Boz, the CTO at Meta, people want to see the Facebook and Meta. They want to see them focus on what they do well. They want to see creating social network products that allow people to connect with their friends and people they want to follow, and not just sort of running around building copycat features, things like Reels, for that sort of tries to rival TikTok. They've tried that with Snap, with everything. They're always copycatting, and they're also just not focused in the face of an increasingly complicated advertising landscape where it's really hard to sell ads, and at the end of the day, that's their core business, building a product people want to be on, and it doesn't feel like they're really doing great at either of those things right now. And so, yeah, there's some rallies, just, I think technical rallies after the losses of last year. But I just think the earnings are really going to start to tell the story of, are they focusing, or are they forgetting that they were once one of the most valuable companies in the world?
Yeah, I think we're going to find out after the bell. So before we let you guys go, we want to get some stock picks. Daniel, we're hitting on the challenges. Where do you see opportunities when it comes to stock and tech?
I see opportunities in the broader internet. So if we look at Google, I think search, while it's being impacted by cyclical headwinds, it's durable. YouTube, I think we'll see improving growth later this year. We like Amazon, even as e-commerce is moderating, given some of the economic headwinds. We think the Amazon Web Services, their cloud platform, remains a very attractive asset. And I'll round it out with NVIDIA, which is a leader in artificial intelligence, where we see a lot of growth over the next several years as AI is applied to areas like healthcare for drug discovery or for, financial services for fraud detection. So a lot to like in the technology sector, in our view.
Sarah, what names do you like?
I like Palo Alto Networks. Cybersecurity is a huge concern with everything from crypto ransoms and, global tensions with tech and hacking superpowers like North Korea and, China, Russia, but also because of layoffs. Disgruntled tech employees can cause a lot of problems for a lot of platforms. And so, that's a name I'm watching. And then the other one is Microsoft. We'll see what happens with this Activision deal. But, I think that the CEO there is making smart moves with investing in things like ChatGPT. And, I think it's a well-priced tech company with a sane CEO, and that's not easy to say right now.